Hey guys, what's up? This is Andrew for TRENDLINES.com. So as usual, I'm here to make some technical analysis. I want to go with you through all the amazing week that we had on AMC with 75 reached again. This was my target. And we had this impressive roller coaster, a lot of information to get from it. So I'm going to give you, as usual, guys, my different scenarios and what you are here for, my new target. Let's get into it. Alright guys, so let's start on the hourly time frame because all the price action that happened in the past week, 2 weeks is very important, and the best way to see it is to be on the hourly time frame because things go really fast here. So this is my last drawings that I'm keeping here for now. So let me analyze quickly with you guys what happened here. So I had basically 4 scenarios. In my last video, I was giving you 4 scenarios. All of them were going to 65. I also had a target at 75, like in the video I did 1 week ago. And basically we went to 73 as a maximum level. So it was the area I was targeting. I have eliminated 2 scenarios. Basically I built 4 scenarios and I kept those 2 guys. And the one that played out was the first one. So now I can eliminate this one, and this is what we had. So very quickly, the way I found this, I'm going to show you guys this again, because when something is working, you need to keep applying it because usually it's going to keep working. So I just applied the Fib extension ratios to the third wave of my last 5 waves development. And this was giving me, guys, here, and this was giving me 65 as a target. So we went slightly above it, but you can see that basically the consolidation, guys, because even on a, when the price is going so quickly from one side to the other, you can see, guys, that the consolidation happened around the 65 level that here has been retested. And then, finally we got rejected. So this is what happened. I think this was on Wednesday, and then Thursday was like a very animated day, guys. We are here making some very strong moves, guys. Losing 50%, then taking back 84%. I mean, guys, this is just incredible. And I think that this will keep happening. So I have here a lot of information. I'm going to do what I usually do with you guys. I'm going to first build my different scenarios. And then I'm going to give you my preferred one. I'm going to give you what you guys looking for, which is basically my new target. You're going to have it. You're going to see, and you're going to be, I think, happy about it. I'm also going to give you here in this video how to actually enter this trade if you want to be in the next move. So let's do things step by step. So we here finished this 5 waves impulse. So right now we need to go to the larger degree wave counting and see what is happening. So here we have a 1, here we have a 2, here we have a 3, all right? So this was the plan, guys. The plan was that we finish this third wave, which is now done. I didn't know if it was finished or not before. Now I know that it's finished here. We're gonna retrace probably to the 35 area, like I told you guys in my last video, and then we probably gonna go to much higher levels again. The reason behind, guys, is just, that moves up develop in 5 waves. This can be explained by some psychological mechanisms. You can just go and click on the link in the description of this video, and I'm explaining. You're gonna basically receive a free training where I explain everything about Elliott wave theory. And basically the third wave is where you have the most greed. But then you have the 5th wave, and the 5th wave is usually weaker, little bit, and you have different type of investors. All of those who were not in the third wave and that heard, of everything that happened here. Everybody's talking about AMC right now, and a lot of people want to be into this wave. And in this 5th wave, usually professional investors are selling and retail investor is buying. So I don't know on which side you want to be, but this 5th wave is usually very hard to trade. But anyway, so here the target is, we measure the third wave as usual, guys. We measure the third wave and we apply it to the bottom of the 4th wave. So it's a target of 135, 36. you know, something like this. But we need to be careful. When the third wave is that strong, that extended, sometimes the fifth wave only completes a one-to-one relationship. So then it would go only to 97. So my preferred scenario is 135, but I also keep in mind that 97 is a likely scenario, is something that, you know, could happen as well. Then we would need to see what is happening in this fifth wave and do the same kind of exercise to know if we're going to 100 or if we're going to 135. One more thing I want to give you here, guys. So when you analyze this price action, what you can see is that, so basically this fifth wave is complete. True. Sorry, this third wave is complete, but we could also have a different counting. And I think it's worth showing you guys this. So this would be my second scenario, is that here we have a 1. So let me put it in a different color. Here we have a 1, here we have a 2, here we have a 3, actually. So the 3 is not going here, and we already have 4 and 5 like this. Because in the third wave here, I would also need, guys, to have 5 waves as usual. So then it means that this one is coming here. Up, up, rebuilding quickly this with you guys. Sorry, it's like this. All right. Then here I have a 4, 5. Okay. So in this situation, guys, in this situation, look at the yellow one. The yellow one is this one. What do you see, guys, here? What do you see? To me, it's kind of obvious. So then let me get rid of the blue one. We would be in this situation. This is another counting that, you know, is my second scenario. I want to show, guys, this to you, and you're going to see that my conclusion is not going to be very different, but it would just be a different counting inside. So we would have different retracements in terms of levels and in time. I mean, when these levels would be reached in the retracements. And the thing is that here, when you look at this wave counting, something to me doesn't look good. So the first thing is that this 5 wave development here in purple, you know, is not, I mean, it's not looking the way it usually looks. The fifth wave here is much shorter compared to the third wave. So I could also make a counting like this. This could be good as well. But even if I do this, I still have some issues in my yellow counting here, is that look at the second wave. The second wave is a zigzag that lasts around, so from the 18th of May to the 24th of May, so roughly 1 week. And here we had a retracement of only 2 days, all right? So you can see that something is not fitting well here. But even if this would be true, guys, even if this would be true, let me show you what we would still have. This would still be like this, you know? So I can take scenario 1, scenario 2. The outcome is the same, guys. And what is interesting, so the outcome is the same, is that we're going to, you know, we're gonna do this time 1-to-1 or 1-to-1.618 extension. So this time we could go to 145 or to 103, all right? So this is my second scenario. But once again, I don't like the counting here. So let me go back to my first scenario that to me was fitting much better. Here we are. So this is my first scenario, guys. So my first scenario is that we retrace here. Now, why are we gonna retrace to 35? So let me give you a few reasons for this. Usually, false waves, they like to retrace to the top of the third wave or the bottom of the fourth wave of the previous wave development. So here the previous wave development is the purple one, and my fourth wave here, let me put this in yellow, guys. I prefer the yellow color for this one. So, and the fourth wave would retrace either to the top of the third wave, and that's why I gave you already in my previous video 35, guys. So we went to 37. I think we're gonna go to 35 ultimately. I'm gonna explain very soon why. So either we go to 35 or we go to 26, all right, which is the bottom of the fourth wave. This is the reason why it's very important you guys have the right counting in your previous wave, because the retracement of the coming wave are actually based on the highs and the lows of your previous wave. So that's why your counting needs to fit the best. Even if the wave is done, is complete, it's still gonna have an impact on the new wave development. So here, like I said, 35 or 26. But let me give you some hints about where we're actually gonna go. because here, once again, this is my preferred scenario, guys. So here I have an ABC. So guys, you know that when you have an ABC in the second wave, you usually have a flat in the fourth wave. And what are we having here, guys? What are we having here? Look at this. It's starting here, going back almost to the same level. So this is the beginning of a flat. So I want to eliminate from here the zigzag scenario. To go to the 26th level, we would need to do something like this with the zigzag. So the first thing is that here we had a zigzag, so here expect a flat, but this is not enough to actually be convinced that we're not going to break 35. But when I see that the retracement here after my wave A was complete, we started the wave B, and wave B went to, guys, 68.71. So in terms of retracement, because this is what is important, how much have we retraced from wave A? We have retraced more than 78.6%, which makes our pattern a flat. This is a flat, guys. So if it's a flat, wave C cannot go too deep after wave A. It cannot be very longer. It can be slightly longer. That's why wave A went to 37. I expect wave C to go to 35, maybe, slightly break it. When the price action is so impulsive and so strong, we sometimes have what we call excess. So it's probably people having stop losses around the 35 level. So if we go just to 34.95, those stop loss are going to just, create a domino effect that can go very quickly to maybe 30 or 32 and then bounce back. So we need to accept that when the price action is so strong, we might have some excesses. And this is the reason why wave C can go slightly below 35. But let's say 35 is the theoretical perfect scenario. So this is my view, guys. So this is my first scenario. I showed you my second scenario. It's just the same one. Let me show you quickly again. I'm not going to go with you through the counting here again. But basically, my second scenario is we do this. And same thing, all right? Now, remember, guys, what I told you in my previous video. When you are actually, long in this kind of environment, you don't want to sell. You want to see how we can go. When we reach some major targets, it's good to take some profits. I know you guys don't like to sell. I'm just telling you as a pro trader what I would do. I would have sold actually 35, bought back 26 if I was quick enough. Maybe not, but I would have definitely not sold everything at 35. Then I would have sold 65, 75. I wouldn't have been executed. I would then be a buyer at 35 only if I have sold at 65. If not, then I wouldn't be a buyer here. I would just keep my position. So if you guys haven't touched anything, I think your position is just good like this, and just keeping your shares is good. But remember that we need to be aware. So let me get rid of this. I'm just going to keep here my scenario. You need to be aware that we're looking for some reversal patterns. So we're not looking for it because we want to see them. We're looking for it because we need to be aware that this can happen. Let me show you guys again what happened the previous time in January when we had this kind of movements. We had here the same roller coaster with red days, guys. 1, 2, 3, 4, 5 red days in a row. Here I'm having 2 red days. I don't like red days. Red days means that it doesn't mean you can have a bullish red day. It just means that the close level was below the open level. It means that sellers won the daily battle that happened. And if they win too many of those, they're going to have more confidence and they're going to keep doing it. So here I have 2 red days. I'm looking for some reversal patterns. I told you guys, like the island reversal, some bearish engulfings. Go check it out, guys. I'm not going to explain here what are those patterns, but I don't see them here. Here I have actually a bearish engulfing. It's basically when the candle here is eating totally the previous candle and you had a strong move up, then a red candle eating the previous candle, like here. Here the open is higher than here. The close is lower than the open of this one because it was a green day actually. And then we had this, move down. But I'm looking more at daily reversal patterns because, we're here analyzing a longer term price action. So I'm keeping an eye on it. For now, this is clean to me. Now, let me show you guys some very interesting data, short interest, option market. I want to update you guys on this. You're going to see we have some very, very cool things. And guys, so let's start first on the option market. So this was what I had the previous time I did it. Remember guys, we had this 70 strike calls opening, and all the calls, all the strikes above 40 opened a few days ago. And when I did my last update on Tuesday or Wednesday, I had nothing here. And I was telling you guys that we want to see those this high strikes having strong positions and exposure again, so that the gamma squeeze can happen again. So now I'm gonna update this with you. All right, here we go, guys. Here we go. So we have more shares. From 104 million shares equivalent, we have 107. So more shares. Where have they been bought? Guys, look, this is growing. So for now, it's not very big yet. 7 million shares equivalent. And so we have a total of, at 37, we were at 18% of short interest, synthetic short interest. If we go to 47, which is the closing level of Friday, we are at 20%, guys. 4 billion USD synthetic short exposure on the option market of AMC. Once again, guys, I showed you very quickly what I do here. I take all the maturities, all the listed maturities. I take all the open interest, all the volatilities. I compute the delta myself, guys, using this formula here. You can see, it's just Black-Scholes formula, guys. And I do this for all the options, and then I just sum it up, guys. And I give you here the real synthetic short interest. That is creating the gamma squeeze. That is creating a potential short squeeze as well. So this data is very interesting to me to watch, and I'm keeping an eye on the volatility here. So, 340%, guys, for the 70 strike call of the July maturity. Guys, this is good. This is good. Market makers are very scared. Those volatility are just keep going higher and higher every week. So this is good. This is bullish. So I can see, guys, here this bullish momentum happening again with the 70 strike calls getting bought massively. So, this is going to create the same kind of bullish momentum that we had since AMC is actually going higher every day. Let me give you an update here on those numbers, guys. So here I keep an eye on the equity float, the outstanding number of shares, the short interest, very important information. I then compute the total short, which is the sum of the synthetic short and the regular short interest. So as the 14th of May, guys, we are having, so I'm using 14th of May data because, this data is published every 2 weeks. And if I check the 28th of May, here I don't have the data yet. It has not been released. As you can see here, I don't have the data. So I'm waiting for this data to arrive because I really want to know, guys, if hedges are actually shorting more shares or not. If yes, this is once again very good, guys, very good. We need hedge funds to, play their role in this move up, which is basically shooting shares, buying them higher. That's what they do. And they're helping the price action to develop higher. What I see, what I don't like, guys, is that AMC is emitting more shares, guys. So they said they won't emit more shares, but they do. Actually, they emitted 50 million of shares. But once again, this money is going to be used to grow the company. So actually, it's fine. All right. It's fine. But apes need to stay strong if, the price action needs to go higher. Because if AMC and hedge funds are selling, you need to have a massive buying power as well. All right. So I'm going to keep here the 4th of June because this is the latest data I have. So here I don't have it up. So what I'm having, guys, is this. So 40% of total short interest. So guys, this is the highest level almost we had since, so this year is the highest level, and it's close to the highest level we had last year as well. So you can see that the same situation is starting to happen. And I still see some upside potential on the stock as I showed you guys. So I repeat, my support levels are 35 and 26. Most likely 35 would hold, maybe with a bit of excess next week. I expect the new target to be reached next week as well. So 97 or 135. Let's see, 135 might be more likely, but we need to see what is going to happen during the move up. And yeah, that's it for me. So I hope you guys enjoyed this video. I hope this would help you to understand how the price action actually develops, even in this kind of environment. You can still apply the same methods as long as you know how to use it. So if you enjoyed this video, please don't forget to click on the sub, like, and bell button so you're going to be the first to know when I upload anything new. And stay close to shore. I'll see you guys.